Hey guys, hope you and the families are doing well. In this short video, I'm going to teach you how to use what I think is one of the most powerful and reliable US market breadth indicators, which is the NASDAQ 100 stocks above their 20-day moving average. I'm going to teach you how to recognize overbought readings and oversold readings. I think this could be very important for the week ahead as the NASDAQ 100 potentially fills the gap from the November 5th high, and that could be a confluence of testing the 50-day simple period moving average as well. So I really hope you like this video. I'll put a link to this TradingView allow in the comment section below, so then you can import it and use it yourself in TradingView. Before we get into it, I'll let you know that Market Surge are today's video sponsor. They're my go-to resource for analyzing company fundamentals. If you are interested in a discounted trial, then you'll find a link to that in the description and the comment section below. So we'll start this video off with a high-level overview so I can explain what it is you're currently seeing on your screen, and then as the video progresses, that is when I'll go into more of the nuances and the details of how I use this key market breadth indicator on a day-to-day basis. So the two charts that we've got, on the top is NDX, which is the NASDAQ 100 index, and the bottom chart is NDTW. Now that is the NASDAQ 100 stocks above their 20-day moving average. Now it's important to note the scaling for NDTW is in percentages. So this is 75% for overbought territory and 25% for oversold territory. So how do the overbought and oversold readings actually come about for NDTW? Well, what it means is when you have an overbought reading, it means greater than 75% of the stocks in the NASDAQ 100 index are above their 20-day moving average, such as you can see in here, in here, in here, and we'll come on to then how I use this on a day-to-day basis. For oversold readings, such as down here, such as down here, such as down here, you can see I've tried to line them up with these green and red zones as well, just to then indicate on the chart where the overbought and where are the oversold readings. So what it means when you have an oversold reading, it means that less than 25% of stocks in the NASDAQ 100 are above their 20-day moving average. So overbought is greater than 75% of stocks in the NASDAQ 100 are above their 20-day moving average, and oversold will be less than 25% of stocks in the NASDAQ 100 are above their 20-day moving average. So that is the percentage scaling over here on the right explained. So that's then how these overbought and oversold readings are registering as that market ebbs and flows. Now I like to think about it as a market tide. So the market tide flows in and then the market tide flows out. So when I'm looking at NDTW, and I'll put a couple of other tickers that you can go and do this analysis with in the comment section below, looking at the S&P 500, looking at the NASDAQ comp as well, I like to think about it as a market tide. So the way I view this and then overlay it with the major index that I'm looking at, being here NDX being the NASDAQ 100, is that proverbial market tide. So I want to be aware of when the market tide is in. So when you get an overbought reading, that market tide is in. Now Livermore spoke about this over 100 years ago, thinking about the next swing. Where is the next swing going to be? Is the market tide going to swing in, or is it going to swing out? Now I think the moving average breadth readings are extremely helpful for you gauging, okay, what do I think that market tide is going to do based on, and again, you can go back, you can study this, you can go back and back and back over many years with this, and you can see the correlations for yourself. You can see that proverbial market tide flow in, overbought readings. You can then see that market tide flow out, and then you get the oversold. So the market will just ebb and flow between these overbought and oversold readings. So I think it's really useful to know, such up here in mid-July, up here you're getting an overbought reading. You see that overbought reading up there, overbought reading for NDTW. So you can see the correlation of up here and up here. So then it's really important for you, I think, certainly as a swing trader, is thinking, okay, overbought here, the market's just been on a pretty good run from this near oversold reading up to this overbought reading. That's that market tide coming in. Where am I expecting the market tide to then move? Well, it's already in pretty far. It's unlikely to come in much further. Yeah, sure, it may push in a little bit more, but actually that next major swing, that main swing of the market tide, is probably going to be a transition from overbought territory, which is greater than 75% of NASDAQ 100 stocks above their 20-day, to transitioning to in oversold or near oversold, which is then less than 25% of those NASDAQ 100 stocks above their 20-day. So that market tide is then going to flow out. So then you can see down here on the August 5th low, you get what I call a gap down reversal bar at the 200-day as well. And it also coincides with an oversold reading on the NDTW, the NASDAQ 100 stocks above their 20-day moving average. So not only are you getting an oversold reading here, you're getting a big gap down reversal at the 200-day as well. That market tide is now out. What am I expecting? I'm expecting that market tide to then flow back in. Okay, so that market tide has gone out. I'm now looking for it to flow back in. So then you can see the transition from oversold, market tide is out, to then flowing in. So now in here, the market tide is in. Okay, this bit here, what's that, kind of around late August or so, last week of August, you can see the market tide is overbought. The market tide has now flowed in. You're now getting a reading of about 90% of stocks in the NASDAQ 100 are above their 20-day moving average. That market tide has flowed in. Where's the tide going to go? If any of you have lived near a tidal place or you've seen tides go in, tides go out, tides go in, tides go out. So psychologically, I think it's really, really useful to then know, okay, overbought here, probably expecting that market tide to flow out. If I'm swing trading or I'm positional trading, I want to chill out a little bit. I want to wait more so until that proverbial market tide has flowed out. So then what happens? Transition down here, you get this intraday oversold reading, which coincides with a big, what I call shakeout demand out, and really strong change of character bar coming through there as well. Okay, now what am I expecting? That transition back into overbought territory, that market tide flowing back in. So as you start incorporating this into, say, your day-to-day routine or your week-to-week routine, you'll just start to see the ebb and flows in the market, and how I think useful, just extremely, extremely, extremely useful an indicator like this is, NDTW, in terms of measuring market breadth. Because over here, okay, overbought territory, well, I'm expecting the market to probably be a little bit difficult, more so from kind of a swing trading perspective. Why? Because that market tide, sorry about that, I had to cough and clear my throat. Currently got a cold, but I thought I'll still put a YouTube video out for you guys, because I also think this video could be quite important for next week, given the context of NDX pulling back down in here, potentially filling the gap from the November 5th high, and also testing its 50-day moving average. If that happens and it coincides with a NDTW breadth reading going oversold, I think that could be a pretty interesting setup, certainly from a swing trading and positional trading perspective. But as I was saying before I had to cough and clear my throat, I was talking about over here in this overbought reading that was registering in late March, the last couple of weeks of March or so. And for me, from a swing trading perspective, and potentially more so from a positional trader perspective as well, I now know that that proverbial market tide is in. I'm expecting the market at a minimum to really kind of chop around and potentially be a little bit difficult for a couple of weeks as that overbought reading transitions to an in oversold territory or near oversold territory, as you can see here in late May. So for me, psychologically, it helps to know, okay, it's probably going to be a little bit choppy for a couple of weeks. I wouldn't be surprised to see the market pulling back in as well. So then you can see the indexes just chop around, and then you get the flush. Now this is where your psychology is then helpful or useful, having an indicator like this, because at this reading here, when it's overbought, you know, okay, yeah, it's probably going to be choppy for a couple of weeks. I wouldn't be surprised to see the market pulling back in, but then you're looking for that overbought reading to transition into the oversold reading. And then when financial media is going, oh, this is terrible, this is terrible, this is terrible, the world is ending kind of thing, actually, then you can go, well, hang on a minute, we're now down here in oversold territory. NASDAQ 100 stocks above their 20-day moving average is down here around single digits, around 6-7%. That is a deep oversold reading. So now what are you expecting from a market tide perspective? Our market tide is going to flow back in from oversold territory to overbought territory. It's just how the market tide ebbs and flows. So having this on your charts and being able to look at it, say, on a day-to-day basis or every couple of days, every week, and just checking in and going, okay, where are we from a breadth standpoint? Where are we from a breadth standpoint thinking about the market tide? Is the market tide out, or is the market tide in? And if it is in, then what am I looking for? What am I expecting here? Well, up here, when you're getting this overbought reading, yes, there's been a nice strong rally, but okay, overbought reading may take a week or two for this market to set, and then the market doesn't always have to go through a significant pullback. What you get here, okay, is the market just basically moves sideways, and then this is a really big shakeout demand tail, if you followed the YouTube channel for a while, underneath the 21-day EMA. So you're getting a really strong candlestick coming through there, shaking out underneath the 21-day EMA. Intraday looked terrible when it was on its lows and heading towards the 50, but nice big change of character there. Be very interesting if we get that bar forming over here on the 50-day and we get a breadth reading in oversold or near oversold territory next week. That could be very, very, very interesting indeed. So then you're getting this big shakeout coming through here, and notice where breadth is. Well, breadth pretty much transitioned into oversold territory. It was down there registering at about 26-27% or so. Okay, well, now you've had a big shakeout underneath the 21-day EMA, panic out a load of weak hands, you got this basing action of a quasi cup and handle forming there. Well, that market tide can now flow back in, and then up here, now you're in overbought territory. what are you expecting the market to do here from a breadth standpoint? Well, the market tide is in. That market tide is probably going to flow out. Now, do you know that the market tide is going to do that? No, you don't know. But down here, when you're then going, wow, okay, big gap down reverse bar at the 200-day and breadth readings are now in oversold territory, that's the time to be, I think, really aggressive then as a swing trader if you see setups that are meeting your setup criteria. So I find this ridiculously useful in terms of thinking about or overlaying with the market and thinking, okay, what am I expecting the market to do here? Is the market tied in? Is the market tied out? What do I think the next swing is in terms of the directional move, potentially for the next couple of weeks? Am I expecting it in overbought territory and pull back? Am I expecting it actually in oversold territory and the market to then rally? So I won't make this video ridiculously long. I'll put a link to this TradingView layout for you in the comment section below. So if you're a member of TradingView, you can import this link. You can import this this chart layout. You can use it yourself. You'll have to set these levels up manually. So that'll just be putting a horizontal line at 75%, 25%. You can color code it if you want to color code it, and then go back and study it and just see the correlations for yourself of overbought readings and oversold readings. So I really hope you guys have enjoyed this video. I would just finish off with, it could be very interesting if we get a test of the 50-day moving average next week and we're getting an oversold reading down here of 25% or less, and then potentially we're getting a big, what I call a gap down reversal bar, where the market gaps down and reverses, or potentially a big intraday shakeout demand tail. So that context, so again, I know I'm kind of rambling here at the end of the video, but this is where it's helpful for you to frame the market and think about the market. That also then helps you from a trade management perspective in terms of potentially targeting positions and managing open positions as well, because how I may manage an open position could be different if I think we're down here, or if we are visually down here from an oversold reading relative to if we're in an overbought reading. Okay, so it can help from a management perspective, but this is where you can then game plan it out and go, okay, well, if I see a big shakeout demand tail that's occurring, say here on the 50-day SMA, and we're filling that gap from the November 5th high as well, so we're filling that gap in there, and then breadth readings have transitioned down here, that could be very, very interesting indeed. Be aware of the negative divergences as well. I may talk about that in a future video. So yeah, hopefully that video there is useful for you guys. Thank you very much for watching. Thank you very much for supporting the YouTube channel. And as always, I look forward to seeing you in a future video.